Dell Technologies presents Entrepreneur Challenge, powered by CNBC-TV18.
Ladies and gentlemen, welcome to the prep round. I'm your host, Shruti Mishra. We're thrilled to introduce Dell Technologies presents Entrepreneur Challenge powered by CNBC-TV18, building on the success of the Dell Startup Challenge and Dwen Dream Tech. Now, this initiative combines the strengths of both platforms, creating a more impactful platform for the entrepreneurial community. The Entrepreneurial Challenge aims to shed a spotlight on the critical challenges faced by startups and emphasizes the significance of embracing technology for sustainable business growth. Participants in this challenge will have the opportunity to showcase groundbreaking ideas, secure vital tech investments, and receive invaluable mentorship. In its maiden year, Entrepreneurial Challenge received around 1,700 plus entries pan-India, which were evaluated by our process partner EY and shortlisted to 200. Now, these 200 quarterfinalists will present their business ventures and startups to a specialized jury. The jury round will be distributed across 6 rooms, with each room evaluating 18 participants, and jury evaluation for the general category will be hosted on 23rd February, while the women categories jury round will take place on the 24th of February. Following the presentations, the participants will engage in a Q&A session with the jury, allowing them to demonstrate their leadership and entrepreneurial skills. Now, jury members will evaluate each pitch based on 6 broad criteria: market potential, product or solution visibility, tech infrastructure, financial strength, team capability, and future scalability. The primary objective of this round is to identify the top 30 participants who will advance to the semi-final round. Now, this is important to note. Winners will be selected from the general category and women category. Each category will have 1 winner and 1 runner-up, making a total of 2 winners and 2 runners-up. So we at CNBC TV18 and Dell thought, why not we provide some guidance towards your pitch? So with great pleasure, let me introduce to our mentor, Padmaja Ruparel. As the co-founder of the Indian Angel Network, Padmaja has led an exceptional journey, elevating the network to global recognition within just 15 years. Now, with 500 investors across 10 countries and a diverse portfolio of 200 companies spanning 17 sectors, her leadership has reshaped angel investing. Padmaja's expertise guides aspiring entrepreneurs through investment intricacies. She's here to reveal investor evaluation secrets, decode pitch do's and don'ts, and share insights from her journey. Post Padmaja's mentoring, we will have our process partner EY to guide you on the jury meet scheduled for 23rd and 24th of February. Participants, seize this opportunity to learn from Padmaja, a luminary in the field. And also, if you have any questions, please do not forget to type in the private chat, and I'm sure she will take as many as possible. Padmaja, we are honored to have you here. The floor is yours, and wishing you all the best for the jury round. Wishing you again, participants, the very best. Thank you. Padmaja, over to you now.
First of all, a very good morning to everybody. And I have to first congratulate the top 200 participants on coming this far. To be selected from 1,700 applicants, I think this is really an achievement in your journey. And for me, as you have taken this step into the entrepreneurial world, have taken this step into doing your own startup, you are a winner, irrespective. Because this is not a competition when you start your business. It's actually how well, how strong, and how far you can take your business. And for my sincere wishes to each one of you, that you succeed and build a very strong and valuable business. Now, you couldn't have started your venture in any other country but in India today. It is the fastest growing ecosystem, the startup ecosystem. We have the maximum number, the rate of growth of entrepreneurial ventures is increasing literally year on year. It is today the cynosure of the globe as entire global investors, strategic investors, financial investors, and corporates are all looking at Indian innovation. You can see this reflected in the talent that is now leading global companies. But what is even more important is the fact that Indian innovation is reshaping global corporates. And today, if you look at in every single way that you look at India and starting up business here as an Indian entrepreneur, it is a win-win. It is a win because our talent, our founders are high quality, thinking innovatively with disruptive products, with innovative business models and scaling. Second is our infrastructure. We have gone way, way beyond just electricity, power, and water. Today, our biggest infrastructure that we built is the digital highway. That has changed the landscape for everything. And fourth, of course, is the fact that we have a huge market, a market with a variety of demographies, with very different customer demands, with very different delivery landscapes. India is the best country today to start your venture, operationalize it, scale it in India, and if it works here, it will work in some other part of the world. So you're ready to go global. Now, what I wanted to therefore come to a point which is very important, that as you build your venture and you want to scale it and take it global, how do you figure out what your venture should be based on? Now, there are two ways of looking at it. I have many entrepreneurs who come to me and say, here is an innovative product. We've got an IP on it. We've created a patent and it's really doing, now you just fund us and we'll take it forward. And when you dig a little deeper, I am still struggling to figure out who's going to buy that product. Much as it may be the best technology product that one would have seen. So to me, what is more important as an investor is that I'm looking for a problem that is the entrepreneur is trying to solve. Is there a clear customer problem? Is there a customer who will buy it? Is he pained by a problem? Can he do things differently? And is that problem a real problem? If it is a real problem, remember, customers will buy it because it will alleviate his pain dramatically. If it's an add-on, then I think the compulsion to buy reduces. So we typically look for companies or startups who are building products which is solving a real problem. And India has a lot of real problems that need a solution. That's the good side of things. You have problems in clean tech, energy, water, you have cyber, you have agri, you have healthcare, you have space tech, you have drones, everything. You think of it and you will have a problem that you can solve. So a real problem also is one where a large number of customers or a large number of people have been impacted. And that creates an automatic large market for your product. So when you are thinking of a technology, when you are thinking of a product which you want to base your venture on, then the most important thing is to figure out what is the problem that I'm trying to solve and whose problem am I trying to solve and how many people are facing this problem whose can buy my solution and alleviate the problem. So I think that becomes a very compelling proposition for anybody to start a product, to build a product and build a business. So that to me is the basis before I get into anything else, why I would like to even start investing time when I'm looking at a company. Now, once you have that done, you need to then go deeper, right? So, how big is the market size? But what is the market becomes even more important. Who comprises the market? Who are the customers? What is the customer profile? Is it a millennial? Is it middle-aged? Is it B2B? Who is the customer? And that customer needs to be very well defined, both in terms of why he or she needs it, as well as why and how much are they likely to pay for your product. Unless you have that really well articulated, your business product will not fit in to the customer's behavior. He may love the product, but ultimately, if he can't buy it, if it's too overpriced, then it's a problem. He's not going to buy it. If it's underpriced, if you underprice your product, then what happens? You leave money on the table, right? So it's very, very important that you understand the problem and you understand the customer literally as deep as you can go, because that becomes really the basis of your venture. So market sizing, customer understanding becomes very, very important. Now, if you are looking as a startup, looking to build a business with your product, what becomes also very important is the innovation. How innovative is your product? Now, innovation is not just a small thing to say, okay, I'm going to tweak this little technology and I'll be able to get a patent and I'll be able to sell this. No, that's not innovation. Innovation is that how do you create a moat around your product so that as your business grows, your customers remain engaged, they remain loyal to you. You don't want competition to create another small tweak to their product and take away all the work that you have done to create market traction. So, understanding competition of what they are doing and what they may be able to do is very important. Secondly, what is important is what your product can do and how it will evolve to retain its uniqueness also becomes very important. So, that to me is the competitive landscape in terms of product. The other piece which a lot of companies tell me is that, you know, I'm going to win because competition is priced this at 100 rupees and I'm going to price it as 50. But if competition is larger than you in both size and spread, then remember, he can drop the price at 40, clean up your market, and then take it back to 100. So price advantage is a short-term advantage. It's not a long-term strategy to remain innovative, to remain ahead of the curve. So I think understanding the competition therefore becomes very, very important. And this piece is sometimes very one dimensional from entrepreneurs that I talk to. Many of them said, you know, we are going to build the next innovation once we've got some traction. I think getting that optimum level of product done and getting into the market is very important, because you as a startup founder obviously don't have the money to sometimes do the full length of the product portfolio that you want to do. But if you pick up your key fundamental product and build it out, take it to the customer, get the customer actually to engage with you, give you feedback, you start evaluating how it's working for the customer, you will have a much better value derivation when you invest in the next evolution of the product. So I think it's very, very important to understand competition, market again, and when you should launch your product, and how closely you need to engage with your customers, especially in your initial years, because they will be your biggest brand ambassadors. They will give you huge feedback to your product, and they can actually become the foundation of your startup. So I think these are bullet points that I'm trying to cover. Each of these goes much deeper, and I'm sure many of you have worked on this, so it may be repetitive, but I will still emphasize that these are points that are very, very necessary for you to understand. The other piece that I wanted to talk to you about is share with you is, you have all the research done, you've understood the market, you've got a product out there, you know who the customer is, but what becomes, where the rubber hits the road is, can you deliver the product to the customer? Having all the pieces outlined and you know exactly what's happening, but if you are unable to deliver the product, to execute, then it is literally to no avail. So one of the things we spend a lot of time on is to understand from founders is, how are you going to build the product? How are you going to code the product? If it's a manufacturing product, how are you going to contract it? What's your subcontracting? Because obviously you're not going to have your own factory at this point of time. So you're going to outsource it. What are your outsourcing partners? What are their capabilities? What kind of contracts do you have? How are you protecting your IP? How will you assemble it? How will you package it? How will you transport it? Are you going to have an annual maintenance contract to support the product? If it's a SaaS-based product, where are you going to host it? Is it going to be on a company-to-company basis, or are you going to do seat per basis? There are different models even in SaaS. So I think thinking through that entire execution model and delivering the product to the customer, which he can use, which in effect solves his problem, right? There is no other way but to execute and deliver on it. Because if you don't deliver, you cannot invoice. And if you cannot invoice, you're not going to get revenues. And therefore, all your hard work would be of no avail, as I mentioned earlier. So that becomes very, very important, as I see it, to execute. I've seen many, many companies fail because they've thought through everything, but they fail on execution. And believe me, folks, execution is the toughest part. Thinking through isn't. Execution is really, really very, very, very tough. And that's where you need to keep all your firepower also very focused. Now, as you execute, you are at a very early stage. You will face some risks, you will face some challenges. Now, I completely believe that there is nobody, no entrepreneur, who would have thought of all the challenges his or her venture would face. There's no way. None of us thought of COVID, for example, right? But we all face that challenge. But what I would like to know is, how deep have you gone into thinking of the plausible risks that you could face? If there is going to be a power outage, how am I going to mitigate that risk? If I'm going to have a logistic problem, transportation problem, how am I going to risk mitigate that? If there is going to be a cash flow issue, how am I going to risk mitigate that? So the risk mitigation strategy is something which is really, really imperative, because it allows me to understand your thinking as an entrepreneur. How deep have you thought? Thinking of everything will not work perfectly. Life is not perfect, and neither is building a business a very perfect plan that will work. There will be huge number of imperfections, but handling those imperfections becomes very important. So risk mitigation plan becomes the other imperative that you need to think about. The fourth thing that I look for is the team. When I am evaluating an early stage startup, folks, let me tell you, I spend 70% of my time on literally evaluating the team. Because when we invest as investors in an early stage startup, right, the bet is on the team. I'm sorry. The bet is on the team. The startup has practically nothing else. The product may be in an MVP stage. There'll probably be very little revenues, if at all. The team is going to be very incomplete. There's no office infrastructure that's likely to be which one can talk about. So what is it? The only tangible thing when we invest as early stage investors are those 2 or 3 founders who we are betting ourselves on, right? And those founders are also promising to us, they're telling us that this is the potential of our startup. We are promising you that we will create a 10 crore revenue or a 20 crore revenue over the next 12 to 15 months. And we are planning to do these things. So it's a potential versus a promise and a plan on the basis of which investors are expected to invest, which is fine, right? But the point is, against your potential, promise, and plan, investors are performing. Investors are performing by giving you a check, right? So think about it. Against a potential and promise and a plan, there is hard performance with hard cash coming into the company. Now, how do we evaluate that whether we should perform or not? The only basis, the biggest basis is the founders. You are the bet. As much as you think it's your plan, it's you who is the bet. So we are then performing against potential, promise, plan, and promoter. Okay. Now, if that is the case, I want to know everything that I need to know about the founding team or the key management team, right? So, academics, experience, how many years or how much time have the founders worked together? What are they complementary? Do they know what they don't know? Do they know what are their gaps? Do they know what they need to work on? Do they know what they know? Do they understand their domain well? Do they understand the customer well? How do I know that they have literally got into the very, very deep understanding of the problem and then fitted in their product? That assessment of the founder is extremely, extremely important. But even more important than that is the fifth P that the startup should have, which is called passion. Okay. If I don't see that passion, if I don't see that excitement for your own venture, if I don't see that enthusiasm that I'm going to build this company, you could have everything and I will still say no. Because doing a startup is a play of passion, right? It is that passion which will drive you to go against all odds. It is that passion which will drive you to tell a customer that I have never done a business before. But you have never seen a product like mine before. And I promise you that my product is going to solve your problem. I think this understanding, this enthusiasm and excitement is what will set the foundations of what could be one day a very valuable company. And founders' enthusiasm is like infectious, right? 2 founders, one is, remember, the lives of early stage founders is full of valleys of depression and some heights of excitement. And if one co-founder sort of gets depressed, it is the other one who has to hold him up. Hey, get up, tomorrow is another day, right? The founder has to be a salesman 24 by 7, 365 days. Why do I say this? You are selling to the customer to say, try my product, it's the best product in the world. And you will buy from me this product from me every single day of your life. He's never known you, he's never tried you. It's only on your salesmanship that you're going to get the first opening, the first order, right? You have to build a team. You're going to get the best, you want the best high quality team that the market can offer, but you don't have cash. The only currency you have is shares. You're going and telling this guy who's got 1 crore or 2 crores of salary in the market, please join me at half the salary and I'm going to give you shares. And believe me, these shares has the potential to be $1 billion company. You're selling. Recruitment is a sales function, not a procurement function. You go to a vendor, you're giving credit to the market for 45 days. Boss, I need it for 90 days. But believe me, if you start working for me, you will be my vendor for life. And as I grow, you will grow and you will be a supplier to a unicorn for sure. So give me better terms. You're also going back to the customer to say, the pilot went well. Now give me the order. And once he's given you the order, say, hey, why don't you give me a little bit of advance? I'm a startup. I'm cash flow struck. You have to build that relationship to get that advance from a customer. And that does happen. I've done it, so it happens. Okay? You're even selling to your spouse or partner. Why don't you go for the movie? I'll just swing past the office and join you. And she says, or he says, that no, you don't need to do that. No, I'm building this for you. So this is your contribution for us to have a better life. So you have to be literally a salesperson 24 by 7. And I'm looking for that. Do you have it in you as a founder? Are you going to build this business irrespective of my money? The best companies from an investor's perspective are those where an investor is chasing the promoter to take my money. So if you can convince that whether you give me the money or not, I'm going to still build it. You want to participate in my journey? Join. I mean, don't get arrogant about it. But I think that grit is what I'm trying to actually articulate to you. So I think that becomes very important. The other piece in promoters, which is very important, is the confidence of understanding what you're doing and what you're trying to do versus mentorability. I'm looking, and most investors are looking for founders who do have a spine. They know what they're doing. They understand it well. When they're challenged, they're able to justify and reason why they're doing what they are doing. But on the other hand, I'm also looking for founders who are open to ideas, who are open to a logical, reasonable conversation, right? Who are open to leveraging experience that more experienced entrepreneurs who now become investors are able to share. So you want a very balanced person or a founding team, which is got confidence but not arrogance. I'm sharing this in all candidness that arrogance is one of the worst things that could happen to a founder. It just puts people off. So try and keep your feet on the ground is what I would say. So that is the piece that I'm looking for. And finally, many of you may smile when I say this, but founders and investors need to have chemistry, because you're going to be working very closely, literally week on week. If you don't like the look of my face, you're not going to let me invest. And you shouldn't. Because if you are going to be switched off every time I come on the table, then it's not helping you, it's not helping me, and it's not surely helping the company. So chemistry becomes very important. Chemistry means that are we thinking alike? Do we have the right value systems? Are we gelling? Right? And it's very, very important because when an investor and an entrepreneur get together to build a company, it's like a marriage, right? Like normal marriages, you are sort of pulling the cart on parallel tracks. You don't want a situation where you're sort of conflicted because then the cart doesn't move. So, like a marriage, for a smooth, happy marriage, you want people who are aligned, who are thinking for the same objective. Okay. But that's where the comparison with the real marriage ends. The real marriage continues till death do us part. But in a startup, the marriage between an investor and an entrepreneur is till divorce doth come, because the investor has to move out at some point, because you would want new investors with larger checks or an IPO to come onto your cap table. And you want your early stage investors to exit. And early stage investors also wish to exit. They would have taken the high risk, they would have got their returns. So they would look for a divorce. So there is a divorce which is imminent. And investors do look for a hefty alimony. So when you are bringing on investors, not only is that chemistry that is very important, but also understanding the objective of investors becomes very important. Investors, especially good, high quality investors, be they angels, be they VCs, I think beyond money, they're looking to work with people who they can work with. They're looking to work with the brightest minds. I think the entrepreneurial community of India reflects that today. Investors, believe me, want to learn from you all. Okay. And what they want to do is they want to partake of a great journey that is coming up. And yes, the financial returns are also important. But if you have just financial return objective and none of the others, then the journey is not synchronized. I'm not going to be adding value to your journey if all I want to say is when are you going to get my shares sold off. That's not going to be a very, very happening conversation for you. But if I'm engaging with you, you are able to pick up the phone and speak to me, get an advice from me, bounce off things from me, get connects from me, get suggestions for recruitment, etc. I've even done policy making for my startups. Then that is the value add that you will value for your business. So you're looking for people as well who will bring that value beyond money. And I am looking as an investor to engage with entrepreneurs who would want me to be engaged in their journey and not just for my check. So you need to think through this. What works for you? The investor would be doing his or her own thinking as well. Right? Let's move to the next section. A lot of people tell me, they send me their Excel sheet with the budget and says, here's my plan, right? See, this is how I'm going to grow. This is when I'm going to spend my money. I need 2 crores. I think what is more important for me when I look at an Excel sheet, the Excel sheet is actually not the business plan. The Excel sheet is a reflection. It mirrors how deep you have thought about your business, right? The business plan should be all the 4-5 points that I mentioned earlier. The product, the problem, the market size, competition, execution plan, risk mitigation, team, right? But the financials are really a reflection of your business plan. And it allows me as an investor to think through, to have a deep insight of how deep you have gone into thinking through about your business plan. So how do I do that? It's very simple, actually. Is when I look at an Excel sheet, I don't look at anything beyond the left column. The left column gives you the different line items of revenue, the different line items of expenses. And I'm trying to think through that in this business, how is he growing? What are where have they missed out on some revenue line item? How deep have they thought through about their expenses? Have they thought about the risk mitigations? How are they building the salaries? How are they building the team? All of that. What is your objective of raising this money? That is very clear from the Excel sheet to me. So the Excel sheet, because the rest of the numbers that you're putting, they are all numbers. These are not based on any data. You're just assuming numbers and you've put it, which is good, which is what you can do. So for me, it's just giving me an insight of how you are thinking about your plan for this company, your vision for this company, your ambition for this company, and how do you want to build this company. So please remember that you will never be sort of evaluated just on the numbers. You're actually getting more evaluated on that left column with the line items, because that gives us an insight which is very invaluable for us. Okay. Now, other than companies which are building a portfolio of IPs, let's park that for a minute. I'll come to it later. All other companies that we invest in, we look for top lines and bottom lines. Okay. So the top line needs to keep growing, but the bottom line may currently be negative. Bottom line is basically your PBT, profit before tax. If you are negative, I quite understand in the first few years. That is why you're raising money. That is why you are a startup as well. That's fine. You can be negative. But I do want to see a few things more. I do want to see when you're likely to break even. Okay. I do want to understand your path to profitability. You're thinking about profitability. So how will I do that? I will now. These are little tidbits I'm sort of sharing with you. I would look out. Are you calculating gross margin? Are you calculating contribution margin? Are you looking for unit economics? Are you tracking your cash flows? Are you looking at your net margin value, net market value, if you are in a e-commerce kind of a business, right? How are you raising money? Your cash flows, how are you collecting? How much are you leaving on the table, right? How have you built your pricing model? Are there ways of improving your pricing model by getting in upsells and cross sells? So, a lot of these things tell me how you are thinking about your company and its profitability. Because to me, very simply, the objective of doing a business if is not only to build revenues. The objective of doing a business is to build revenues and create profits. If the outcome is not to create profits, it's not a business, in my simple language, apart from the companies which are building portfolio of IPs. So profitability is very, very important for me. Let me come to two last points before I stop. The next point is really the cap table. How are the shares divided between the founders? How are you thinking about engaging key management through ESOPs or share options? How have you recognized people who've helped you this far in your journey? Could be mentors, could be advisors, whatever, right? The cap table gives me your deep thinking about how you are planning to own this company, right? I have companies which I've seen where there are two founders for sure. One is holding 90%, the other is holding 5%, and there's 5% ESOP. I would hesitate because, in effect, the 5% held by the co founder is part of ESOP. So I prefer equal or almost equal founders in terms of their holding. or a very good reason why he or she is not almost equal. I want to understand the ESOP pool percentage that you have earmarked. How have you arrived at that percentage? Because that percentage is again not just allocating percentages. It is a reflection of understanding the gaps in your team and how you plan to fill those gaps. And to fill those gaps, you need to bring in key people and how you will then incentivize them. Because the reality is there's no one person who can really build a scalable company. You can have a company with a proprietorship, but then that will have limited value or growth. But here we are talking about companies which can really scale and create, if not global footprints, at least domestic footprints, national footprints in the country. So then you can't do it alone. That's the reality of it. So if you have to engage more people, how are you going to engage them? How are you going to drive them and that bring in them that ownership in them so that they do what they need to do and beyond? So I think the split of the cap table becomes very important. Because then you are increasing the size of the pie instead of the share of the pie. So if you are able to take a company from 100 crore valuation to 1,000 crore valuation, that's better than holding 90% of 100 crore valuation rather than holding, let's say, 50% of 1,000 crore valuation. It's as simple as that: share of the pie versus size of the pie. So that becomes important. I also would like to see that how, there are all of us have advisors, mentors who've sort of handheld us through the very early part of our journeys, be it a startup or otherwise. Are we recognizing them? Because that again tells me how you are engaging with people who helped you, how you are building in that expertise, that experience, and building this company out. And third is the cap table also needs to tell me that when I'm investing, I need enough equity in the hands of the founders so that the subsequent round investors find it interesting. If there is not enough left with the founders, then subsequent round investors are not likely to be excited, and that means that this company is not likely to go very far because raising money will become very difficult. So it's very, very important to think through different things, which then also reflect the vision and ambition that you have for your company. So I would say that, and this is a big one, it also sort of influences valuation. It also influences your recruitment process. It also influences other lines of business that you may want to build. All of these get influenced by this. So this is a one where a lot of thinking is useful, and I would honestly suggest that you take advice as you build this out, because this is not going to only impact your present, but actually the impact in the future will be much higher. So that is on what I would say the cap table in brief. And finally, you need to understand the investor. I would strongly suggest that, see, investors, when they start looking to invest, they're looking with three very clear purpose. One, do I get along with this entrepreneur? Two, is this a space that I can add value to? Is this a business I can add value to? Will I be able to contribute? And three is my financial returns. And when I'm thinking about financial returns, I'm thinking about three questions. What kind of returns am I likely to make? How am I going to make those returns? Is somebody going to buy my shares, or is this company going to go get acquired? And when am I likely to make returns? These are the three questions that are going on in my mind as I keep talking to you. So that's what the investor is thinking. And it's a very good idea for the entrepreneur to actually engage with the investor, because if the investor wants to invest and divest in 2 years, that may not work with your plan. So, getting an understanding of your objectives of your investor is also very, very important, other than the non-financial part that I mentioned earlier. So that these are some of the things that I think I wanted to share with you of what I have learned in my from others. None of them is proprietary. I'm I've also been learning, and I'm just sharing what I've learned as much as I can. But at this point, I think I will stop and open up for questions. There are a
Hi,
couple of questions.
ma'am,
Yeah.
can you hear me?
Yes.
So, ma'am, I think there has been some technical problem.
Yeah.
Just give us a couple of minutes. The team is checking on
Okay.
the same. It was a very insightful session, ma'am.
Thank you.
I mean, for people like us from consulting, very motivating.
Thank you.
There are quite a few questions that have come in, but
Yeah,
they're
I
just
know.
being, I'll be asking those questions to you, ma'am. I'll pick up a few of them because if you answer all, it's going to take some time.
No, not sure. Take your time, no issues. I hope I've covered all the points you wanted.
Yes, yes, absolutely. The remaining ones I will take care of when I talk about the process a bit.
Okay.
Yes. There is one question on the chat, ma'am. I'm not sure.
Yeah.
Are you able to see? So maybe you can just see that. I'll ask you that question first. If that's
On IT.
on the private chat, why investors are not investing money in the manufacturing company and much more
Okay.
interested to invest in service-based platforms.
Okay. Should I start?
No, I'll ask you that. Maybe you can just think
Yeah.
about it.
Okay.
Yeah. In the meantime, they figure the technical bit, ma'am. I
Mhm.
just wanted to understand your opinion on this challenge. I'm sure you
This
would
show.
have been on various jury panels. You would have seen this. How do you think that this will be benefiting the uh, entrepreneurs? And since we have a women's section separately, just wanted to hear your thoughts on that.
No, I think this is a good program you have. I think it's a good one. I think what becomes very important is actually to get the entrepreneurs to do a rehearsal of their pitch,
Hmm.
because then their presentation will be of a very different quality compared to what they would do without
A
rehearsal.
rehearsal. Okay.
Yeah, I think that in my mind has really changed, literally changed it.
Hmm.
So that I think is what would be important.
When I talk about the process, I will be mentioning things that they need to have in their pitch presentations, because what we had received earlier in the initial round, it was
Hmm.
the usual pitch deck, which I think they must have prepared for other activities.
Right.
So not all the informations were present. So I will be talking on that as well, as to how
Yeah.
they need to strengthen their pitch presentation, and accordingly then make a presentation to the jury, because they have only 5 minutes to talk, so how they need to manage time, etc.
Yeah. Okay. They're back live. Maybe you can start.
Yes. uh, okay, so thank you so much, ma'am, for your insightful session. I'm sure everybody who has heard this must be taking something really back with them. I will just be asking you a few questions that the participants have put in the chat. The first being, why investors are not investing money in the manufacturing companies, and much more interested to invest in service based platforms.
So I think the answer lies somewhere in one of my earlier points. Let me bring it up. Okay. So manufacturing, if you understand it closely, it's a high capex industry, right? So if you get into manufacturing, there is a need to either have a factory or you have to have contracting, but your working capital is what is your big need, right? And secondly, is in our country, there are very few companies which have been able to scale on manufacturing itself. They have scaled, but very few. Now, the way I see it is manufacturing itself has changed. It has gone through a metamorphosis. And this has happened because of one of the infrastructure foundations that has been set up in this country, which is technology. And therefore, manufacturing tech companies have actually attracted venture capital. For instance, we ourselves have invested in a couple of manufacturing tech companies, and they have done hugely well. So a lot of the companies that the lot of the manufacturing companies that we see are still very high capex. VCs are not going to be able to invest that, and I don't think startups should raise money from manufacturing sector. If you're getting debt, please raise debt. Please don't raise equity. You don't want high risk dilution that happens, because the reality is that when you raise money from VCs or angels, they buy shares in your company, they become co-owners, and you as a manufacturing company, to address your working capital requirements, you could well get debt. So, my suggestion, and what I've also seen, is that manufacturing companies usually raise debt. But as soon as they bring in technology where there is innovation, where there is scalability, where there is the capex requirements goes down, investments have started to happen. And as I said, we ourselves have done that.
That's
Also,
great.
yeah.
Hmm.
Also remember that the nature of VCs and angels is to get high returns. okay, much higher than what, let's say, market returns or debt returns would be. Now, if they have to get high returns, they have to see a hockey stick revenue line, and they want to start seeing a profitability. Both of those is what they want to invest for.
Hmm.
So it is like capital for growth rather than capital for working capital. So in that case, it's easier to actually look at companies which are low capex, where working capital needs are not that high, and it's going into more of growth investment. I hope that I've answered the question. You are on mute.
Yes. Yes, ma'am, you have. The follow up question to this was from Aman Sharma, that why is so that Indian investors are more revenue focused, and IP or pre revenue rich startups find it hard to catch investors' interest?
So see, IP companies, companies which are building a portfolio of IPs, typically the way to monetization, which means that the way the company will make money is going to be largely through acquisition, where the IP will get acquired, either just the IP or the company itself. Now, India till late has not been a great country where mergers and acquisitions at an early stage have been common. They have been very uncommon. It is only recently that M&As have started. Large corporates have started to acquire young companies. Even two or three young companies have come together and merged to build a larger footprint. It is these this change that will start encouraging investors, early stage investors, to invest in IP portfolio companies and target mergers and acquisitions. We ourselves have done that. We have invested as IEN in IP based companies, and we are looking at two or three of our companies getting acquired, fortunately, by global majors. So that is one reason why IP has not attracted money. Second thing, unlike the US and Israel, IP based companies have not been allowed to go public, right? They could have very good valuations, but in India, there is no ability for such companies to go public. And therefore, if there is an exit block, if there is no IPO, if there is M&A is difficult, then how do early stage investors exit? How do they make their monies and sell their shares? If that exit doesn't happen, they will not enter. And that's been the hurdle.
Okay, fair enough, ma'am. Um, in addition to this, what about the companies that are in sports field? A lot of people have that question, that because this is an industry which is growing at a faster pace. So, how do you see their future as an industry overall?
No, actually, I see that this sector will grow because remember, India is becoming increasingly aware of the need of for sports. There is an increasing focus on fitness. There is an increasing, leagues happening. Kabaddi league happening. Cricket, of course, is a given. You're seeing different sports come into play. Archery is happening. So I think the sports field has got a high potential, huge potential, and it is likely to grow. But again, you have to think through the business model. You can't be doing a boutique kind of a play to attract angel or VC investors. You will need to think of a scalable model. You'll need to think of, how are you going to scale it through technology? I mean, let me give you a very fundamental thing that I look at when I look at companies which are not building portfolio of IP. Typically, I look at five things, which I've explained otherwise. Is it solving a real problem? Okay, is it an innovative or a disruptive solution? Is it going to be profitable, or path, is it on a path to profitability? Is it has it adopted technology to scale? Because that's the only way one can scale. And fifth, quality of entrepreneurs. If you have these five things sort of well sorted, there's no reason why sports should not take off.
Okay. And ma'am, what about the sentiment of investors with respect to emergency and health tech sector?
See, health tech is, I'm surprised somebody is also asking this, because health tech is huge, especially after pandemic. Health tech has been a huge focus, right, of investors. And we've seen some brilliant entrepreneurs also emerge during this period. The number of startups we've seen has grown 3 times in the past 3 years. I think health is an anti-inflationary. Everybody is focused and will spend on health, so there's no reason why health should suffer. However, I think what's happening is there's a lot of innovation, there's a lot of tech enablement of health happening. There's a lot of interesting DIY kind of med devices happening. Biotech has emerged. Genome has, the genome space is opening up. Robotic precision medicine and surgery is opening up. So data analytics has sort of really taken up a huge penetration into health tech. So my sense is health tech is a booming sector and will remain so.
We also sometimes find, ma'am, that investors are slightly reluctant in investing in a health tech startup purely from a background verification point of view. So, what should the startups in this field do, particularly when they go for such pitch rounds?
No, that's what I'm saying. That you see, let me give you an analogy. If you are living in Delhi and you are asked, somebody tells you to buy a house in Coimbatore, it's going to be very hard for you because you don't understand the lay of the land there, right? You don't know which are the good residential colonies. You don't know what should be the price. You don't have any idea. So if I'm an investor who has zero understanding of the health tech sector domain, if I don't have connects in this space, if I don't know how to evaluate the company, then I'm not the right investor for you. So just as investors look for entrepreneurs, entrepreneurs need to also figure out investors who would understand their business, because otherwise it's not going to work. It's a waste of time. So I think that is number one. Number two is go to angel groups, because angel groups have people with different domains coming together. And what happens is, if there are 2 or 3 people from the health tech sector who says, yeah, I understand what he's doing. Yes, this is a problem for the doctors. Yes, this product could solve the doctor's problem. We are willing to put in some money. The company wants 5 crores. 3 of us can't put in 5 crores, but listen, we can put in a small amount. Behind them, the 5 crore raise becomes very easy, because other angel investors from that group will invest behind the domain expertise of these 2 or 3 investors. So my sense is a very good option for early stage health tech startups is to go to angel investor groups like the IN group, for example. We also have Bio Angels, which is in partnership with BIRAC, Department of Biotech, the Innovation and Entrepreneurship arm of the Department of Biotech of Government of India. And we are able to bring in expertise from there, technical expertise, domain understanding. Plus, we have our own investors who are doctors, who are practitioners, who are building devices, who worked in the health tech sector. So I think look for the right investors. And that is not only relegated to health tech. If you're going to quantum, you need to look for somebody like that. If you're in space, try and do that. If you're in manufacturing, look for somebody who is there, because that is what you need. That is what will help you not only raise money, but get value add to your company as you grow it. Yeah.
That's a great insight, ma'am. Um, in terms of service industry, what should the entrepreneurs focus in order to scale their business? Should they focus only on the product, or what else can they do to scale the business?
I think the focus in a pure service business should be that how do you reduce costs? How do you increase your margins as you scale?
Okay.
Because if you're going to do, let's say you're doing 25% margins with 10 people and you do 25% margins with 100 people, doesn't make sense to me, right?
Hmm.
How can you make that 25% margins 40% or 50% or 60% as you grow to 100 people? Because then you have really scaled for profit, number one. Number two, you have clearly deployed technology. Okay. And therefore, for you to take it from 100 to, let's say, 100,000 should be much easier. So build the foundations of scale. That's why you have SaaS as a
Hmm.
model, right? So thinking through those is important. Yeah, I agree.
And from a scalability perspective, ma'am, how important it is for the startups these days to leverage technology?
Oh, it's central. Period. I mean, no technology, no scale to my mind.
Okay, that's a great statement to make, ma'am. I'm just looking at the last set of questions. A
While
lot
you
of
figure out
people.
the questions, I just want to tell the people on the call, I've been pretty upfront. Please pardon me if you think I was rude, but I wasn't. I'm just straight up and nothing personal.
No, in fact, a lot of people have written, ma'am, that it was an incredible presentation and your insights have truly helped them.
I'm glad if it's helped.
Mm,
Worth the time spent.
yes, I think we have asked all the questions. I'm just going to quickly confirm with the team if there are any more. One more question from my side, ma'am. These days, I mean, young entrepreneurs definitely are, on one hand, focusing on cost and how do they increase their margins, etc. But there has also been a lot of them focusing on sustainability. I would like to hear your thoughts on how much importance is that given by the investors on how much is your business sustainable.
Now, sustainability means what? To my mind, sustainability means that you are able to sustain your business, which means that you are not going, you're not increasing losses. Is that the question?
So there are two parts of it, ma'am. One is definitely having a sustainable business. Second, what I meant by sustainability is how are they impacting the environment through their business model in a positive way.
So, yeah, I think, look, there are companies which are focused on sustainability. So we have a company Pool which is cleaning up the Ganges with the temple waste. It's producing some very, very high quality premium products, right? Now, their whole focus was to be sustainability was their vision. So they built the model around it. But if you have a SaaS model, I think if you're an online CRM product with a SaaS model, I don't think you're thinking about sustainability in that way, but your model itself automatically is sustainable because you're not spending too much carbon, you don't have a high carbon footprint, etc. So I think uh, um, you need to be, I think everybody today, companies or individuals, are very focused on at least I would say people who are aware, are very focused on not being, not being spendthrift on sustainability, if there ever was a word like that. So I think it depends on the model. But if you are an online CRM product with a SaaS model, I think thinking about sustainability is not going to make a difference, right? Because you are online. But on the other hand, if you are a D2C, then you have to be thinking about those things. So, thinking about how do you have um, greener packaging, for example, is important. Or your model or your product is based on sustainable, like pool is, or things like that. So I think it depends a little bit on the business. But yeah, I think everybody is aware of being sustainable.
That's great, ma'am. Thank you so much for your valuable insight. It was a great session. We all were lucky to have you, and I'm sure everybody, all the participants that have attended the session, would have truly, got a lot of insights from your presentation. Thank you so much.
So thank you. Thank you for having me. And as a last word to the participants, do your best, make a real dent in the ecosystem, and let the jury work for their money, right? Let them fight for between them to choose you and have more winners from which they can actually choose. But for me, all of you are winners. Just going and building a business, I haven't done it. You've done it. Thank you.
Thank you. Thank you so much, ma'am, for your time.
Thank you.
After the valuable insights we have got from Padmaja ma'am, I would like to welcome everybody again. And I'll quickly introduce myself. I'm Pragya Srivastava, manager at Ernst& Young, and we are the process advisors for the Dell Entrepreneur Challenge, along with working very closely with the Dell and CNBC team. Um, from now till the time that we have, I'll quickly take you through the process that we have put together, the journey that has been so far, what is the expectation that we have, or the jury, so to say, will have on the presentation day, and certain things that you should keep in mind while making your presentation. And also, what are the things that you should put in your pitch presentation while you present to the jury, along with the time management. Okay, so I'm going to quickly share my screen, and if anybody can confirm if it is visible. So this is one of, I'm sure all of you would have been part of several awards, competitions, etc. But Dell Technologies have come up with this entrepreneur challenge. It's a great initiative. It is given an opportunity to all the entrepreneurs, male, female, everybody. And this is such a great platform. And I'm sure everybody who has applied for the awards, as well as the shortlisted participants who are with us today, will be gaining a lot of benefit just to be partnering with this entire challenge. Winners and runner up definitely have a great takeaway. But I'm sure everybody, the shortlisted finalist at each level, will be gaining a lot of insights. You all will be getting an opportunity to interact with eminent jury members at each stage, and answering their questions, making your presentation to them will definitely help you in gaining a lot of feedback on how you can make your business better and grow in the future. In terms of the process that I was talking about, we had the call for entry period where we received the applications from over 1,700 entrepreneurs all across India, and we reviewed the entries at the first level based on the eligibility criteria that we had set in. In terms of the review, post which the entries which qualified were shared with a set of expert jury members who actually went through all these cases, and after thorough evaluation, the top 100 per category, which is your general and women category, was shortlisted. And After today's shortlisting, we have our quarterfinals, which is scheduled on the 23rd and 24th of February, where we have the general category and women category presentations will be made to the jury members. And Post this round, we will have top 15 picked from each of the segments, so 15 from general and 15 from women category. So a total of 30 presentations will move to the semi-finale round. And there's also going to be another session which we will definitely take you through when we arrive at that leg. And there's going to be a lot of mentoring activity which has been planned to ensure that whatever feedback you all get at this stage is being taken care in the presentation while you make to the semi-finale round. And followed by, we will have top 10 presentations for the grand finale, which is scheduled currently on the 15th of March in Bangalore. And we have, I'm sure, with the kind of responses we have received from the participants, we will definitely have a tough fight at the grand finale round. And in order to make your presentations and a little better for the quarter finale round, we have put together few slides which I will quickly take you through, and then we will open up the session for Q&A. So, in terms of the jury interaction, as you all are aware, 12 minutes per participant is allocated, right? Out of which 6 minutes is the presentation time by the participant, followed by 6 minutes of Q&A. So it is important that there are certain things which is kept in mind, because again, 6 minutes duration needs to be used well in order to create that sort of impact on the jury members. So we would request that whichever pitch presentation you all put together for the jury, ensure that they are in bullet points. It should not be text heavy, because if something like that is on the screen, jury finds it very difficult to read, then they may not pay attention to what you're talking and try reading the slide, so it will be confusing for them. So try not reading your presentation, have bullet points mentioned. What you can do at your end is definitely explain those points in detail, so that it becomes easier for the jury members to understand your thought process for each of the parameters that we will speak in the following slides. Definitely switch on your camera, ensure that you have a proper virtual background, and with no noise, because this 12 minutes time is what has been given to you, right? Use it to the best. Ensure that all technical challenges are taken care of. You do dry run with your internal teams and ensure your internet, etc., everything is taken care of, so that when you are in front of the jury, everything, you use those 12 minutes properly. Prepare and be confident. That is something which I'm sure each of you have that potential already. I need not harp upon this fact. But I'm sure interacting with the jury members do get you a little overwhelmed. But preparation is something that will definitely help you in interacting with them and also presenting your case. In terms of the pitch presentation, we have certain guidelines. There is no format as such which we are giving you at this point of time, because we understand that there is less time and the presentation is scheduled on the 23rd and 24th. And we have already gone through the pitch presentations which you had shared in the initial round. So the guidelines that we provide you, we encourage that you make changes in your existing pitch deck and share that with us, so that it becomes easier for the jury members as well. What we are also going to do is the revised presentations that we receive from your end will be shared with the jury members beforehand, so that they go through the same and they have their set of questions, so that the 12 minutes we have with the participants, the jury members would like to use it well. Divide your time well, like, and I will talk about it in detail in the following slide. uh, what we have in mind, definitely that is indicative. Participants are allowed to make tweaks, but based on our experience, how we think you can utilize 6 minutes well, I'll talk about it in the following slides. And also, because there is only 6 minutes of time, we don't want you to um, continuously talk and not use pauses, because it is important that you take uh, a pause and then start. It also helps you to put your thoughts together and give jury members also a bit of time to grasp the information coming to them, right? So while you prepare yourself for the presentation, ensure that you are using pauses in the middle, at least between the slides, or if there is additional information that you're providing, so that it's taken well by the jury. In terms of the 6 minutes presentation that I was talking about, how we have divided this, again, like I mentioned, this is indicative. You can choose how you want to go about this, but if this is followed, at least you ensure that everything that you want to talk about or is mentioned in the pitch presentation is conveyed to the jury, right? If you have a very exhaustive presentation and you're unable to finish it in the 6 minutes of time, unfortunately it will not be of any help, because the jury members would not be in a position to evaluate you on all the parameters, right? So the guidelines that we provide to you ensure that the presentation you are putting together is covering that in some capacity, because each of those parameters have certain weightage while the jury member is evaluating you, right? So first and foremost, definitely set a context about yourself and your business, assuming that the jury members are meeting you for the first time. So it's important that before you dive deep into the product, solution, your USPs, etc., set a good context so that it also interests the jury members. Like I mentioned, we will be sharing pre-reads with the jury members. And they will be going through these details. So 30 seconds to 1 minute is a good time to set that context about yourself, your educational qualification, little about your business, etc., followed by the 4 minute of time that you have. Ensure that it's spent well across the 6 guidelines that we will take you through in the next slide. And you divide your time in such a way that each of those aspects are talked about or is present in your presentation in some capacity, right? Followed by use the last 30 seconds to conclude your presentation. It is extremely important. What happens is, a lot of time when we make a presentation, we are so caught up on the time. We want to finish everything with respect to the USPs, impact, etc., that we spoke about. But conclusion definitely gives a lot of weightage to the jury. It also helps them think that yes, this entrepreneur has good time management. He or she is concluding their thoughts, and this is what you give to the jury members, basis which they will be asking you questions. So ensure that you keep the last 30 seconds, 40 seconds to just summarize your whole presentation and not run over the time, right? Like I mentioned, any explanation or sentences that you are talking to the jury have certain supportings mentioned either in your case or while you talk to the jury. use cases is extremely important. It helps them also understand the business better. Keep it simple, keep it straightforward. Listen to the questions before responding, especially if there are there would be different people in your organization managing different functions. So and of course you are the only one who's representing all of them. So ensure that you listen to the questions. You are well prepared on everything that has been mentioned in your presentation, right? Because you are representing the company. You will not have the opportunity to go back, check, and come in case if there's something which you cannot answer. So ensure that whatever you are putting in the presentation, you are completely thorough, and you're able to answer the jury members well. uh, I want to spend the next 5 to 10 minutes on this because this is the most important slide in terms of the process, and also for each of you to understand this well, because your pitch presentation, which you will be making to the jury, needs to have representation of each of these pointers in a sufficient manner so that the jury members have a relative understanding about your business with respect to these pointers. So I'll talk about each one of them in detail. First being the market potential. Um, I'm sure Padmaja ma'am has given us the understanding of each of these points from an entrepreneur point of view or from a startup point of view. What I will be explaining to you will be how the jury members are going to be looking at this, right? So, from a market potential point of view, they will definitely look at how is your product or solution solving a problem. It should not be a product or solution that is looking for a problem, rather, but it should be solving something which exists in the market in whatever capacity. That's the jury members understanding. But from your side, when you explain about the product solution, definitely highlight what is the problem that your product is trying to solve. And if there is a use case, it's the best way to explain. Also talk about if there are any competition in the market, right? Because this is also something that the jury members will definitely ask, to understand that what is the market size, how much, how many of the competition exists in the market, what is their market share, so to say, and how much of that percentage is your market share with your product and services, right? So that will also give them some understanding on how big your business can be, and give them an understanding on the future scalability aspect as well, right? Also, what sort of problem is the solution trying to solve? Is it an existing problem, or is it something which is completely ahead of time? Maybe Indian market currently is not ready, but this is something that will definitely come up in future. So if this is one of your USPs, do talk about it. Moving on to product solution viability, I think Padmaja ma'am has explained this beautifully. I'm just going to reiterate the point from a jury's perspective. When you explain about your product services, the must have is what is the unique selling proposition, the USP of your product. Why do you think this product service is going to be disrupting the market? How is this, explain the product market fit. That's very critical. And if there is a price element to it at this point of time, how are you better than the competition, right? Like Padmaja ma'am mentioned that this the point, the price perspective or capacity cannot be the only element as your USP, because if there is a bigger player, they might squeeze you there. But if it is one of the USPs that you have, do bring it out. Followed by the utmost important point on how are you using technology in your current product services. How are you going to be using it in order to scale your business? So divide this into two parts. Existingly, how are you using technology? Okay, how are you making technology as your hero in the entire business operation? Okay, spend time on that. There could also be a possibility that, maybe currently you are not extremely technology heavy. However, you are going to be spending some time starting now, or starting sometime back, as to how is technology going to be helping you in scaling your business in future. So explain it in both the ways. Currently you are not that technology heavy, but this is the plan in action. Or if currently you are technology heavy, then how is that helping you is, in your business solution? Because this is something the jury members are definitely going to be watching out, uh, because technology is the key element to this entire challenge, right? So spend a good amount of time in explaining this, definitely. Financial strength point of view is, what the jury members are going to assess is what is your financial strength understanding at this point of time. Do you have things figured out for you, or it is still something that you have not thought about? You have focused on your product services, but not thought about where the finances are going to come. If you have something in place already, if there is some sort of investment, or made by yourself or by family, if you're a bootstrap startup, do bring this out so that the jury members understand that you definitely have a plan, and this plan of yours is definitely going to work in the future, right? In case if you have received any investment, do bring that out as well. It will give jury members a perspective. And If you haven't, that's also absolutely fine, but make that disclosure. It's important, right? Moving on to team capability, and how, or the team structure that you have within the team. How many founders? If you're the only one, you can mention that. Since technology is such a big thing, do you have a CTO in place? How much is the percentage of your current workforce who understand technology, right? So bring out that perspective. What are the sort of skill set that the founder requires? You might not want a case where it's a healthcare. Hypothetically, just giving you an example for discussions, healthcare, right? That will also raise a red flag. So do bring this out, that how is the business and the team that you have together will help in, of course, scaling this business in future, right? Because you need to have the right team. So bring that out as well. Also, the last but not the least is your future outlook. It's extremely important that you bring that out, that this is again not just one of the ideas that is being presented to the jury, but something that definitely has tremendous potential. So jury members are definitely going to look at, when they do your business model, the organizers as well as the jury members are trying to support those founders and those entrepreneurs who have an understanding of what it takes to sustain and what it takes to scale in future, right? So these are the 6 important parameters that you have to keep in mind while putting together your pitch presentation. Like I mentioned, again, there is no format as such that we are sharing at this point of time. We would request you to alter your existing pitch presentation in place to ensure that it has all representation of all these 6 pointers in some capacity. And while you also rehearse within your group, ensure that the 4 minutes or 5 minutes that you want to spend, how are you going to talk about each of this in your presentation? Because each of these do hold certain weightage. So please do not eliminate anything. Do try and cover each of these points. 12 minutes is what will be given to you. 6 minutes for your presentation, followed by 6 minutes of Q&A. As you're aware, we have 100 presentations that the jury members will be evaluating on day 1 as well as day 2. So we will be absolutely strict in terms of the time management, because there are several panels created to ensure that the jury members have enough time to go through the entries, and also the participants have enough time to present. But just ensure that you all are using the time well. And one more very important thing, we will be requesting you to work on your pitch presentations and share it to us by end of day today, because like I mentioned that these presentations will be shared with the jury members and as a pre-read. So we want to ensure and send them a little in advance so that they have time to prepare as well, right? So we'll be expecting you to share your pitch presentations by today end of day. And now I will open up for the Q&A. Okay. I will first go on to the chat. Sorry. Okay. So the first question is, do we need slides with a detailed PPT or just verbal is enough? And I think Trisha has asked this. So Trisha, we will require you to share a presentation with the jury, because 6 minutes of talking without seeing anything will also sort of not attract that much attention from the jury members. So keep it minimal, keep it bullet points only. Of course, the focus is of the jury member is to listen to you, but do have a presentation. It will definitely help as a pre-read, like I mentioned, and also while you're presenting. In case if the jury members happens to miss a point, they can at least look at the presentation and connect to what you're talking, right? Question from Akshita, how to cover all this in 5 minutes? Sorry, but yeah, we do have 5 to 6 minutes only for this. And I hope the time management that we have spoken about would have been helping you to put this together. I'm sure once you start preparing, you will be able to talk about this in the 5 or 6 minutes that you have. Maybe the teaming bit and the financial strength, investment, etc. You can cover in the initial introduction part, because you're also spending about 30 seconds to 1 minute in doing that. So you'll have to do certain permutation combination. 5-6 minutes is the only time that we can give you, unfortunately. But I really hope that the time management that we have spoken would help you, in using the time well. Okay. Then another question we have from Saurabh is, can we include short demo video? Absolutely, you can, Saurabh, but like I mentioned, you have 6 minutes, right? Out of which 30 seconds to 1 minute will be your intro. So if you think that the demo video that you will show to the jury members will answer those buckets in terms of unique aspect of your product services, or a USP of your product services, or how is this impacting your target audience, etc., definitely go for a video demo. There is um, you know um, restriction from our side, so to say, that you should not be. What we want is that you cover all the 6 points. If you want to cover it in a video or in a presentation, it's totally up to you. But please ensure that you are fitting the time given to you. Okay. Question from Raji, what will we submit to you by end of today will be what we will be delivering during speech time. Yes, absolutely. I do understand that there could be minor changes that you might be making, because of course while you make the presentation, you prepare, there are certain changes you make. So we will leave that to you. We will not hold you that whatever you share it with us today, you cannot make any changes. Having said that, please don't make any major changes, because like I said, this is going to the jury members. They are already seeing through this presentation, so if they see something which is completely different, they will not then be able to align and ask questions, right? So minor changes here and there definitely is fine, but do not make any major changes. And we have enough time that we are giving you guys to make this, so work on this and share it with us by end of day. Also, on the day of the jury, which is on the 23rd and 24th, we will be giving the option for the participant to share their screen and make the presentation, right? Because we understand that you would also want to manage time. So that option will be given to you. We can also do that on your behalf. You'll let us know whatever works. But just to answer the question, do not make any major changes after you share it with us. Okay, then the next question is from Anuja. 24th is the presentation date. Could you let me know the precise timing, as I will be traveling? Yes, absolutely, Anuja. We were just waiting for this call to happen. We will be sharing the schedules for both the days, 23rd and 24th. And there will be a 15 to half an hour minute window that we will be providing to you, so you all can make your travel arrangements accordingly. Any So yeah, so another question is from Mr. Rajput. If any technical issue happens from your side to share the screens, will we be getting spare time or not? Absolutely. If there is any technical issue that happens, we have kept some buffer time, which is why we have given the option for the participant to share the screen, because we don't want us to have that responsibility, and if something else, some tech issue happens at our end, and the participant should not break the flow of their what they are talking to the jury. So we'll give that option to the participant to share the screen so that they are more comfortable. But in case if any genuine technical issue happens, we will give you that sort of extension. Don't worry on that. Answering Gagan's question, will we get to know the jury members in advance? No, Gagan, we will not be sharing that in advance. There are certain confidentiality processes that we have, which we cannot disclose. You will be meeting the jury members directly on the day. There will be around 3 to 4 jury members in each of the panels, if the number helps. And uh, from an expertise perspective, they are all either founders, co-founders of their organization. They do have a lot of technical understanding, right? So they will be from the IT industry as well. So this is what we can give you at this point of time, but unfortunately the names cannot be revealed. The next question is that from Swati. Can we share by tomorrow, please? I'm traveling for the rest of the day and won't be possible for me to make essential edits. Swati, we'll take this up separately. Unfortunately, we are sort of pressed on time, but we'll see what we can do. As of now, the deadline remains the same. It needs to be shared with us by end of day today. Akshita's question: what platform will be used for presentation? It will be a Zoom meeting link, Akshita. We will be inviting all the participants in the waiting room. There is going to be breakout rooms created because there are parallel sessions which will happen. So everybody needs to come in the main room first. We'll do a quick tech check, and then we will be assigning you to your respective rooms, right? So can my co-founder also join the presentation session? Currently, only one person from the business is allowed, because we have only 5 minutes. Multiple people might just run over the time. So at this stage, for this round especially, only one founder who is shortlisted and has been reached out by the team will be joining the presentation. And we should be able to communicate the final timings with you by tomorrow. The CNBC team will be reaching out to you because we are still figuring out and working on the schedule. So please expect that by tomorrow. We have last 1 minute to wind up the session. Any last questions anybody has before we wind up? Just reiterating, the jury is scheduled on the 23rd for the general category and 24th for the women category. The timings are 12 to 5 p.m. You will have a 12-minute window with the jury, but we will be giving you around 15 to 30 minutes of window to be present, so that you can plan your etc. and be on time, because unfortunately we will not be able to make any sort of last minute changes. Okay, last question. Our idea will be exposed to other participants too, or only with the jury? Absolutely not, Mr. Rajput. You will be presenting only to the 3 to 4 jury members who are in your panel. No other person, especially the participant, will have access to your presentation. So it's purely going to be you, the jury members, and one representative from EY who will be monitoring the session. I hope I have answered all the questions. You have our email IDs. Please reach out to us if there is any further clarifications that you might need. We will be expecting your revised pitch presentations by end of day today, and we'll be sharing your respective time slots by tomorrow. Thank you so much once again for joining this session, and I hope that this has been useful for you in some capacity. Congratulations once again to all the finalists who have made it so far, and all the very best for the jury round. And we will be waiting for your revised pitch presentations, and hope that we'll be seeing you very soon on the 23rd and 24th of February for the quarter finale round. Thank you so much once again.
Dell Technologies presents Entrepreneur Challenge, powered by CNBC-TV18.